This client was the biggest tax saving created last month at Pivot Wealth, where they saved $34,000 in tax by putting a few strategies in place. So I wanted to unpack so that you can learn from what they did. He was an individual in his late 30s on a really good income, $380,000. Yes, it was tech sales before you ask. He was saving almost $8,000 a month and asset position was $1.1 million. He was frustrated with the massive tax bills that he was getting and the fact that he felt like that he was leaving some money on the table. There were rules that he didn't understand and therefore couldn't take advantage of. What we ended up doing after going through the advice process, the main thing was implementing a debt recycling strategy on his own home. He had a bunch of money sitting in his offset and strong regular savings. And what we did was pay that down his non-tax deductible home loan debt, and at the same time, draw it out of tax deductible debt to invest into a share portfolio, paying down his non-tax deductible debt, creating some nice tax deductible debt, and building a solid share portfolio at the same time. We also diversified his investments because he was working at a tech company and he'd been given a lot of shares through restricted stock units or RSU plans with the employer. He was sitting on a really concentrated investment portfolio. We diversified that out into a nice index fund, low cost portfolio to smooth out some of the ups and downs that he'd been experiencing in the recent market wobbles. Relatively simple tactics that we put in place, but often it's the most simple tactics that are the most effective. And you see that using the rules to your advantage, particularly at these sorts of levels, can provide you some significant upside.